Bosh, how's it going everybody? My name's TradeX, this is my trading den, and today we're covering institutional order flow entry drills. Incredibly important pieces of price delivery, and for me it is the market tipping its hand to you in terms of which way the direction of the market is likely to be leading to next. What we need to understand though is what they are, how to spot them, and then how to utilize them moving forward going into your trading. So without further ado, let's get this intro rolling, then we'll jump straight into good stuff. See you on the other side. In today's episode, this is what we're going to cover. What is an institutional order flow entry drill, the context, and then how to frame trades using an institutional order flow entry drill. This isn't going to be me just parroting ICT concepts. This is how I specifically use institutional order flow entry drills in my own trading. So hopefully you guys can take this and adopt it into your own and actually find some genuine value from this video. In short, it is a fair value gap, and I'm assuming you all know what fair value gaps are by now, but if you don't, just very, very briefly, it's a three candle formation with a gap in between the middle, in between the first and third candle. The gap's left open, so you can see the high of this candle, the low of this candle. At no point has price rebalanced this range, so this becomes a fair value gap. All right, so in this example, this is a 1 minute fair value gap. Now, an institutional order flow entry drill is when price dips into the fair value gap and expands higher. This becomes an institutional order flow entry drill. It's the expectation that the fair value gap is not going to fill. What that means for me. And for me, we know that fair value gaps have quadrants. Now, I classify an institutional order flow entry drill when a wick doesn't close below 50% of a fair value gap. In short, that is an institutional order flow entry drill. Price wicking in to a previous fair value gap, not closing it with the anticipation that price is looking to expand higher and not close in that fair value gap. What is the context as to why price wouldn't close in that fair value gap? Let's move on to that. Context, as with any model, whether it be a 2022 model, whether it be an inversion fair value gap, whatever it is, has to have context. We have to have context as to why price is going to be expanding in a certain direction. An institutional order flow entry drill is when price is aggressively looking to move into a higher time frame target. This is when a buy program is triggered and we are looking for price to drive up into a target. However, in order for that to be high probability, we have to have the context before as to why price would be doing that. So what I'm going to look at is an example on Tuesday the 18th of July. So for those of you who want to go and back test, you can look at this. And what we have is this higher time frame order block, which formed on Friday the 14th. Now on Tuesday, which is the day when the institutional order flow entry drill took place, it wicked into mean threshold of this daily order block. And we can anticipate, therefore, price wanting to expand higher to take out liquidity, which NQ had already taken, okay? As always, guys, we have to have context first, okay? And if you don't understand how to do directional bias and draws on liquidity, I have done an episode on that. I'll put a link and a comment card at the top right hand. I'll also put the video at the end of this one for you to watch. But just know we have to have reason as to why price is moving to a certain target. Then we can use an institutional order flow entry drill as context for why price would be moving higher. So let's go back to this order block on the daily. Price has moved back into mean threshold and we're anticipating price to drive higher. Now we can drop down onto the bellwether and we can start combining time and price. As we know, time and price is incredibly important. Time before price. What happened here at 9:30, which is the CME open, price moved down and into this order block. Okay, why is this order block specific? Well, because all of this is engineered liquidity just above mean threshold of this daily order block. So when price came and purged this short-term liquidity into this 15-minute order block, this gave us a buy template for price to be aggressive in the day. Now we can start looking at price action to support the order flow that price is bullish and wanting to reach higher time frame targets. And that is essentially what an institutional order flow entry drill is. It's a market tipping its hand to you that price is wanting to expand in a certain direction. Here's an example of the 15-minute and how I utilize it. Once we've had this purge on the sell side liquidity, price has expanded higher. This is a breakaway gap, okay? So I'm not anticipating this fair value gap to be rebalanced at this point, okay? Price is aggressively expanding higher. And when price is aggressively expanding higher, fair value gaps, volume imbalances order blocks will be respected as it moves higher. What I'd be looking at in this example is a fair value gap just above the breakaway gap where price can dip into before expanding higher. And this would be the signature and price I'd be looking for as an institutional order flow entry drill. At this point, price has no reason to come back all the way here because it has a higher time frame target to reach and it's got to aggressively get there. Again, an institutional order flow entry drill is the expectation that a fair value gap will not fill completely, and we're looking for the upper 50% of that fair value gap to be respected and then aggressively displacing higher. Once I see this delivery in price, and if I did not already get in down here, this is where I could start utilizing this as an entry on the lower time frame. Why am I specifically using the higher time frame? Well, for me, you can find institutional order flow entry drills on all time frames. Price is fractal, so you can find these on the 1 minute, 2 minute, 15, 1 hour, 4 hour. You can find them on all time frames. However, for me, I like to use them on the bellwether chart, which is the 15, because that's where a lot of the volume is if I'm an intraday trader. And I'm an intraday trader where I take my entries on the 1 minute and 5 minute, but I'm looking at the 15 minute and 1 hour for context. So I'm looking for where the majority of the volume is within a 15-minute window. That gives me confidence on the lower time frame to then enter. I hope that makes sense. But because I've seen this institutional order flow entry drill on the 15-minute, this gives me further confidence on the lower time frame to start looking for entries around that. Okay, so let's jump down to the 1 minute and have a look at this in more detail. Here we are on the 1 minute chart, and what we can see delineated here is that 15-minute institutional order flow entry drill, and now we're looking at price on the lower time frame to support bullish order flow. What do I mean by that? I'm looking for volume balances to stay open, I'm looking for fair value gaps to be respected, and I'm looking for price to continue in its buy program as it moves higher. An institutional order flow entry drill, specifically when it's combined with time and price, is when price is entering a buy program. Okay, now there are countless examples of when I can utilize this. If you want to trade with me every single day, guys, I do have a private Discord called Red Pill Trading. The links will be in the comments below. If you do want to join, feel free to hit up the links and you can trade with me live every single day. So price has hit on the 15-minute, this 15-minute fair value gap, and price is now aggressively expanding higher. Once we break this high, what do we have? We have a market structure shift. After a purge of short-term sell side, this is when I'd anticipate price to remain bullish. So now we're combining higher time frame down to lower time frame. Higher time frame institutional order drill entry drill, lower time frame break of market structure shift after a super short-term sell side, looking for price to expand higher. At this point, if you did not get in anywhere here, you could look at this order block, and at this point, you're looking for order flow to support bullish price. All right, so this is a bullish order block. You can get in anywhere inside this order block. Stop goes below the low. Why? Because price has no reason to go below this low. Because if price has entered a buy program and we're expecting price to aggressively expand higher, price has no reason to come back below this low. It's already fulfilled that objective. So now we're just looking for price to continue higher. Okay, so order block comes back, fair value gap respected, moves higher, comes back into this order block, moves higher, comes back into this order block. All of this is bullish order flow out of this institutional order flow entry drill. All right, now how could you pick targets? We can just touch on it very briefly just to give a little bonus. This is where we could look for a previous dealing range that has been broken through, and we could measure out a standard deviation as a price target. So I'm looking at this dealing range, low to high, this pivot high which took out this high, this low which took out this low, this dealing range, extend this out, 1 time standard deviation, this becomes the price target. So this would ultimately become my terminus after witnessing this institutional order flow entry drill. And of course you could take partials en route, 0.5 a standard deviation, or if you had any other projections or price targets en route. But ultimately you're utilizing this as support for your trade, your thesis as to why you get in, why price is aggressively expanding higher, and then you're just looking for price to support that as it moves to your ultimate terminus. Okay, so just in summary, guys, institutional order flow entry drill is the expectation that a fair value gap is going to remain open. Anything above 50% of that fair value gap is valid, and I prefer to use the 15-minute. For me, preference is the bellwether chart, and then I look for entries on the lower time frame. Then we have to have context as to why price would aggressively expand higher. Finally, once we have witnessed the institutional order flow entry drill, we are then looking to see order flow support that as it moves towards our terminus and our objective. If you found the video useful, guys, please do consider smashing that like and subscribe. And until next time, trade safe, trade smart, and I'll see you on the next episode.